Good morning, welcome to Morning Markets. Today we're going to focusing on the latest interest rate decision in Europe and why the US economy continues to show strength. Over the last 18 to 24 months, global central banks have been raising interest rates in order to bring inflation back down. Yesterday we heard from the European Central Bank. They have been raising interest rates for the 10 consecutive meetings, pushing up interest rates from 0 to 4.5% since July last year. Yesterday they decided to not raise interest rates again. This was on the basis that the economic data in Europe is softening. We're seeing some weakness within the manufacturing sector and the service sector. As well, in the labour markets, we're starting to see tentative signs of cooling. So this is a slight change in policy, but interest rates expected to stay where they are. They're seeing inflation moderate or continue to moderate. From its peak was at 10.6%. It's now down at 4.3%, so getting close to that 2% target. The president of the European Central Bank, Christine Lagarde, talked slightly cautiously about the economic growth data that she was seeing, but indicated to the market that they could still raise interest rates in the future, given that inflation is still some way above their 2% target, and ruled out any talk about cutting interest rates anytime soon. In the US, coming into the year, there was the market consensus that the US would tip into a recession. This was on the basis that they've been increasing interest rates quite aggressively for some time, and because of that, that would slow the economy and actually tip it into recession. That has not been the case. The data yesterday was economic growth data for the third quarter of this year. It came in far higher than what the market was expecting. An annualized basis of 4.9%, expected rate was 4.5%, but up from 2.1%. So the US economy continues to show real strength. When we look at the details, consumer spending continues to be a key factor to the strong economic data coming through, with household spending really focused on durable goods orders, and that's coming in at around 4%. When we look at the other details, what we're seeing is broad strength within the US economy, whether that come through government spending, residential fixed investment, net exports. Across all pieces, we're seeing strength. We're seeing a little bit of moderation in the service sectors, but still positive growth, and really highlighting that the US economy continues to do very well, and that's despite interest rates going up. In terms of inflation, what we're seeing is inflation continues to moderate. We saw that in the third quarter GDP data. Today, we'll get another reading on inflation. Expectations are for it to moderate from 3.5% to 3.4%. So getting closer to that all-important 2% target. Next week, we'll hear from the US Central Bank. They'll be deciding where the appropriate level of interest rates is. Currently at 5.5%. The market's expecting no change, and that will be supported if we get inflation coming in line with expectations or slightly below. But we'll keep you up to date next week, so stay tuned and have a great weekend.